It's been nearly a month since the Fed kicked off its rate cutting cycle. The implications, they stretch beyond investors and financial markets and they impact the everyday lives of tax filers. While lowest and lower interest rates can lead to reduced borrowing costs and increased consumer spending, they may also come with challenges that affect tax liabilities and financial strategies. Let's bring in Eric Boughner, who is the BNY Pennsylvania chairman and Midwest regional president, to weigh in. Eric, good to have you on here with us. We received that 50 basis point cut back in September. How are you advising tax filers to prepare for future cuts as we approach filing season once again?
Great. Thanks, Brett. It's great to be on. At BNY, we make money work for the world. And our framework around that is we manage it, we move it, and we keep it safe. And that framework is perfect for this conversation around managing it. We are firm believers in tax managed strategies. If you haven't already been investing in these strategies all year, now is the right time to talk to your advisor and think about harvesting any losses that you might have. On the move it side, one of the biggest opportunities here is around what you're doing in the charitable space. Figuring out how you're going to do that, getting that activity away. We like to say, think about giving away the gain and thinking about using low basis positions. And then finally, setting up a donor advised fund is helpful. And then finally, on the keeping it safe piece, review your wills, review your estate plans, make sure they are aligned with where they're going. We often say we're not in the prediction business of understanding exactly what's going to happen in the markets or with tax legislation, but we're in the planning and preparedness business. And to us, that's the key point in any market, to manage it, to move it, and keep it safe.
And so within that planning, how are you anticipating that rate cuts would impact anyone's tax filing plans, especially as the Fed is anticipated to continue, maybe not doing 50 basis points at every meeting, but certainly the neutral rates and the thinking around that from the FOMC seems to have shifted significantly?
That's correct. So both the market and the Fed are kind of forecasting, another 2 cuts this year and maybe 100 basis points next year. So you have to look at, all of your tax liabilities and your estate planning activities, plus your investment portfolio, and figure out which ones are tied to interest rates and which ones have impact. What we've been seeing is, frankly, the opportunities for multi-generational, lending, from one generation to the next, is a key part of this, as well as establishing things tied to interest rates and just looking at the overall asset allocation that you have that might be generating, additional taxable gains. So less taxable interest income equals less taxes overall is what we're trying to emphasize with our clients.
Certainly. As we kind of drill down into some of the current events taking place, the IRS has announced tax relief for some individuals and businesses affected by Hurricane Helene, giving taxpayers until May 1st of next year to file most tax returns. So what exactly does this mean for the upcoming filing season, and how do people know if they qualify?
Yeah, well, I'd say first off, in any season, again, back to we're not in the prediction markets, we're in preparedness. Start your planning early. There's a number of changes which are occurring, in the next calendar year with the sunsetting of the Tax Cut and Jobs Act, at the end of 2025, which is important to begin thinking about that right now. You need to line up your tax advisors. They're going to be incredibly busy next year. So overall, we kind of prepare for the worst situation that begins, not waiting until year end, not waiting until the beginning part of next year to get affairs in order, and to be prepared to do that, such that if there are delays and are extensions that are granted, that everyone is aware of them and is prepared to move ahead appropriately.
Within that preparedness, households, they like to have a checklist that they can reference and go to. Is there a kind of general rule of thumb taxpayer checklist that BNY, as you work with your clients, that you guys abide by?
Yeah, 100%. We have a firm tax plan. We start early in the year and walk through this around understanding any investment allocations I talked about earlier, any interest income, organizing kind of the taxable and itemized deductions, recognizing that there might be a change going forward next year. So kind of bringing forth any of those itemized deductions into this year might be a good idea. Around charitable giving, around financing, and finally, kind of the golden rule around this is kind of just being prepared and understanding what might happen, but following a systematic approach to doing that and working with your advisors starting early at the beginning of the year, not viewing tax preparation as something that you handle at the end of the year and the beginning of the following.
Eric Boughner, who is the BNY Pennsylvania chairman and Midwest regional president. Great to have you here on the program with us. Thanks so much, Eric.
Thank you.